28%. Then we can say that the management of gap is good because it lost its profit 15%, not the 25% as its competitors. So whenever we talk about how, or when there is comparison involved, then please look out the information. If information is not given, then you cannot say for sure. How bad, we don't know because we don't have enough data unless we have its comparison. We can only compare from its last year. That is the only comparison we have right now, and we say that it's bad, right? So if I tell you that $833 million profit is good or bad, the answer is no. We don't know. Why? Because $833 million is a huge profit. But whether it's good or bad, then you are given the information from the last year. Okay, then you say that, okay, now the management did bad. How bad? You have competitor, you have industry analysis or competitor analysis. No, then we cannot say for sure. Then the second is retained earnings, that how much earnings we retained, we reinvested in the business, we didn't distribute. So the portion of net income reinvested into the business, right? So net income increases the retained earning. Yes, we know that the formula is the beginning retained earning plus the net income. So if there is plus, right? So whenever there is income, it increases the retained earning. So net losses and dividends, right? Who decreases the retained earning? The dividend. Dividend is minus. Dividend is the distribution from the net income to the owners or shareholders. So dividend or net losses decreases the retained earnings, right? So net income flows from income statement to statement of retained earning. So that's why I told you there is a logic that first you need to find out. If you want to find out the retained earning ending, you must find out the income. And that's why first we find out income from income statement or statement of income. And then you find out the statement of retained earnings to find out the ending retained earnings. And then you can make balance sheet. So the key point here is that corporations are not obligated to pay the dividends. So dividend is not compulsory from the law that you have to pay the dividend. Income occurs, okay, income belongs to shareholders. Now it's company management decision through annual general meeting that, okay, we want to distribute or not. Sometimes they distribute 10%, sometimes they distribute 50%, sometimes they distribute 100%, right? But income for sure belongs to the owner, okay? But the dividend payment is not obligatory. Maybe they need to keep that income to accumulate that one for the rest of the 3 years, and then they buy, and for them, so then they use that income to business expansion. So this is a typical statement how we made the retained earning. So again, don't confuse by this word consolidated because we are doing GAAP incorporation, and GAAP incorporation is a big multinational organization. So don't worry about that. So here, the formula is the same. First, beginning year, retained earnings. So you see that GAAP incorporation, company name is there, statement of retained earnings and statement of retained earnings for 2 years. We just want to make 1 year. So 1 year retained earning. How we can find out that? First of all, retained earning beginning year 30th January 2010. Add net income, right? So minus the dividend, and you find out retained earning of the end of 2011. So if you see the next 2 years, so this would be ending retained earning of 2011 would become the opening of 2012, right? So this, because this is 2 years, so don't just get confused. Remember that one, the formula is the same, that retained earning opening or beginning plus net income minus dividend is the retained earning ending. For example, this is 2011. So in 2011, 12, that ending will become opening. And then again, net income of that year. So it means this net income would be 2011, not 2010. Okay, 2011, because we are making 2011 retained earnings statement. This is 2011, right, guys? So just remember that the formula for retained earning, and you are good to go. And then the logical stuff is the balance sheet. Number third statement that we make is the balance sheet. But balance sheet, also called statement of financial position. So balance sheet shows us the net worth of the business, how much our business is worth in millions or billions or in currency whatsoever. So it reports assets, reports liabilities, reports stockholders' equity or owners' equity, right? But the most important stuff is it has to be dated at a moment in time when the accounting period ends. So if balance sheet at December 31st, which means, okay, balance sheet, total assets are, for example, 200,000, right? So what does it mean? It means our company is worth of 200,000 at December 31st. It's not December 30, it's not September 30 or September 20, right? So that's why I'm talking about that. I was stressing at that point at the specified date. That's it. It won't tell you the future, it won't tell you the history. It is on the same day, on 31st of December, when it was made, that was the position of our business. That's it. So, number one, the asset side on the balance sheet. So we know the balance sheet equation is assets is equal to liabilities plus owner's equity. Right? Now first let's talk about the assets. And what do we call the assets? Assets are all the things that a company holds or a business holds. That's it. Right? And now we are talking about the categories. Assets have two categories: current assets. My bad. Current assets, these are, and then current assets and long-term assets. We also call this fixed assets. But let's just talk about first the current assets. So current assets, their life is equal or less than 12 months or 1 year. If the life of an asset is less than or equal to 1 year, we call this this is current asset. Right, guys? Now, second part is or within the business operating cycle, if it's longer than 1 year. So normally the business, operating cycle is 1 year from January to December. In some countries, it's June to July, 1st June to 30th of June or 1st of July. It's 12 months. But if it's more than 1 year, then of course current asset would be under the life of or equal to the life of business operation cycle if more than 1 year. But generally, the worldwide principle is 1 year mean 12 months. That's it. So current assets, cash and cash equivalents. Now you can say that, okay, we just save our money to the bank and it's keeping over there for 10 years or 2 years, 3 years. How we can say that its life is less than 1 year? So thing is that if you want to sell this with respect to convertibility, so you are in China and you have dollar. Can you convert it into dollar instantly? Yes. So its life is less than 1 month. Consumption life or converted life. Cash equivalents, like you have a gold coin or you have other currencies, right? You can convert it that one. So for example, if you are in China, you have yuan, you present it to a shop owner and he accept that and give you the money, give you the product, right? That means its life is less than 12 months. It's easy to convert into cash. That's it. So it is current assets. Short-term investments like shareholders, like bonds, government securities. If you have ample cash, if you put it into a current account, it won't give you any income. For example, if you have $1 million for 3 months, you save it with the bank for 3 months and you can earn a interest, right? So if you can earn an interest, you bought it short-term investment. So its liquidity is a little bit low, but less than 1 year. Maybe it takes 1 or 2 days to claim your 100,000. You need to, you know, you need to, provide information regarding your withdrawal to the bank 2 days earlier or 3 days earlier. So it takes 3 days to convert into your cash. So that's why, or if you want to sell the stocks, so it takes 1 day or maybe 1 minute or maybe 3 minutes, 2 minutes, or maybe 15 days, right? But of course, it is less than 1 year. Accounts and notes receivable. So these are your, I think I have explanation here as well. Let me just look one by one. Here we go. So cash and cash equivalents. So cash is the liquid asset. What do we mean by liquid? Liquid means how easily it can convert into cash, right? Like I told you, cash equivalents are money market accounts, easily converted into cash, bonds, gold coins, right? Different currencies. Short-term investments, they are securities, bond and stocks, government securities as well, right? You can sell it to the bank, to the stock exchange. You can also sell your stocks over their bonds of other companies as well, right? But the intention is within the next year, within 12 months. Account receivable, which are amounts collectible from customers. So you sell your goods to the customer worth $1,000, but he paid you only 600, right? It means 400 he have to pay you. So that become your account receivable, right? So receivables are your current assets. Of course, no businesses allow its customer to pay after a 1 year. Maximum they allow you to pay you 1 month, 15 days, 10 days, or maximum 90 days. I have never seen